The Parochial Report. Some of you, or those of you who were at convention, will find this will be less newsworthy to you, although I will go into more details tonight than I did at convention, since I was certainly under some time constraints there. But the Parochial Report has changed, and it's changed in two very important ways. One is that they are now serious about the March 1 cutoff. And so before the canons of the church said you have to get your parochial report in by March 1, but they allowed input into the system, that accepted the data all the way until May 1st. That is changing this year. So on March 1, that system is shutting down. You will not be able to input your data after that date. And so you will have to, if you don't make it by March 1st, you will basically be filling it out on paper and sending it in. And that's unpleasant for you and unpleasant for me and us. So please, pay attention to this deadline. This is not the last time you'll hear that from me. It is, I will send out a number of reminders, but that's a very important change. So many of our churches, I think about a third of our churches were, literally got them in before the 1st in the last few years, meaning, 2/3 of them took it as a soft deadline. It is now a hard deadline. So please be warned about that. The second change is they have completely revamped the financial section of it. I think there may have been some changes to the other sections too. I'm honestly not so focused on those. So I'm only going to talk about the financial part, but they have completely revamped the financial part so that it has some questions that you are familiar with. But in general, there are a lot fewer questions, although if you have an endowment, there's going to be some new and interesting questions there. And it has implications that go beyond, because it impacts your net operating income, or the way net operating income will have to be calculated. So I'm going to get into all of that. For the first thing I think I'll do is let me just take you down a quick review of the new format itself. And let me share my screen here. Okay, I hope you all can see that. So this is kind of basically I did the PDF printout of the new form. And one of the things you'll find is quite helpful is for each question, they actually have the instructions right here on the form now. And so before you had to go off and find the instructions form. The instructions haven't changed that much to the extent that they're, for the same questions. But now they're very conveniently right here in front of you as you fill it out. The first few questions are the same as before. So we want to know what are your pledges? What's the count of pledges that you received? And here, excuse me, in the instructions, it describes exactly what to count. And then it has the monetary amount of pledges, again, same as the question before. And then we get into the third question, plate offerings, pledge payments, regular support. That is exactly the same question as before. So that's basically what was all the money you were given this year, whether it came in by the plate or by check or whatever. So anything except for an endowment of regular support. And then everything starts changing after that. So as we get into question 4, they're asking for contributions that are restricted. And this is a catch-all. And so this is any type of restriction. So if somebody gives you a restricted gift for the choir to be spent this year, that's in here. If they give you a restricted gift to pay for the new, the renovations to the organ, that's in here. If they give you money for an endowment to be held in perpetuity to provide support in any type of restricted way, that's in here. So this could be operating money. This could be capital funds. It doesn't matter. It could be perpetual. It could be restricted to something being spent next week. It doesn't matter. If it comes in and it's restricted, it's reported on in question 4. Question 5 then is the catch-all, all other revenue. And so all other revenue is everything. So that is your rental revenue. That is your investment income or distributions that you're taking. That is bequests. Uh, any type of fundraisers you have, you name it. Everything else goes in question number 5. Then you will see we go down into, now we're into, sorry, question 6. Oh, I think question 6 got cut off here. But basically, question 6 is all of your expenses. And so it's interesting, it didn't print out. And so this is before they asked you to break out your expenses in various different ways. And now we're down to 2 expenses questions. You have operating expenses in question 6 and capital expenses in question 7. So that, again, this is simpler. And there's a lot of things about this which are simpler than they were before. That simplification can be problematic when it comes time to capturing or trying to back into a net operating figure. But in fact, it actually makes it fairly easy for you to report. Whereas before you broke out expenses for what was your pledge and what did you donate to seminaries. And so now it's just everything except capital expenses is in question 6. And then all of the capital expenses are in question 7. So that's going to be quite simple and straightforward. And then how much cash did you have at the end of the year? All cash checking and savings balances. So that, again, fairly simple across all of your accounts, your clergy discretionary funds, the altar guild, you name it, it should all be in there. And, any checking account, they're fairly clear here. Anything held under the congregation's federal ID number. So very straightforward instruction. That's your cash. Now, so what's interesting is in the prior version of the parochial report, all of that took 19 questions to capture. Now it's in 8. So you can see it is dramatically simplified to get to that point, but we're not quite done yet. So then that is the primary financial information that they're looking for now. And then there's a second tab for additional financial information. And so a lot of these questions will not apply to many of our churches, and it will apply to some. So then we go to question 9. Do you have an endowment or other investment accounts? And so if you say yes, if you toggle on yes, you then get this breakdown here that you see in 9A. And so you need to break out the money, and this is new. We did not have this before at all. How much of it is endowment, how much of it is non-endowment, and within each of those categories, how much of it is restricted and unrestricted. So basically, you're taking all of the money that you have in your investments and putting each dollar into one of 4 buckets: endowment restricted, endowment unrestricted, non-endowed investments, non-endowed restricted investments, non-endowed unrestricted investments. You're totaling those, and then you're totaling into a grand total. So you need to be able to separate out your, sort of bucketize all of your investments. This is very similar to what you'd have in a financial audit. But again, since most of you don't do financial audits, most of you have probably not had to face this at all. But you need to be able to think about your money in these buckets, which I don't think is going to be particularly hard for most of our churches. And then they ask, what percentage draw did you use? And so that's just sort of taking, how much. And so in 9C, I would have reversed the question of these two. I would have put 9C first before this one. How much did you draw for use in 2024? So that's fairly straightforward. How much money did you take out of your investment accounts? And then in effect, and what was that as a percentage of your account? What's interesting is they don't seem to be specifying here at what point in the year. I would do it based on the starting year or the end of the prior year's balance. They haven't been specific here. But what they are getting to is how much are you drawing down? And then they ask, what was your gain or loss? This is, again, something that's never been asked before. We've not historically incorporated that into the financial results, in the parochial report financial questions, but they do need to know. They're now asking, hey, what did you gain or lose? Which helps get the full picture of your financials. And it's often been something that was a bit of a mystery on the last one, because you'd see these big changes in investment totals and wonder, oh, was that a gain, a loss, a withdrawal, an increase in funds? It was often a mystery exactly how something changed. And now they're asking in a fairly straightforward way. So how much did you gain or lose? And so theoretically, one should be able to reconcile all of these numbers because you would have had last year's investment total, your gains and losses, your dollar amount withdrawn should get you down to what's the ending balance in the current year. And they explain that here in example E. You can see an example of just exactly that type of calculation. Then we have another new question. So question 10, does the congregation have any outstanding debt? That's, again, been one of those mysteries that has been not included in the parochial report in past years. And so, sometimes I would see a mysterious change in a church's cash position or something, and it turned out they had taken on debt or paid off some debt, and it tended to be more paid off debt. But you would see, you'd see a big change and not sort of see where did the money go? Well, paying off debt was not an expense. And so it never showed up in the parochial report in the past. So now see, how much debt do you have and why do you have it in question 10? And then question 11 is fairly straightforward. Do you own any buildings or land? And question 12, do you have any leases? So 12 becomes a little more interesting. So again, here's more detail. So this is something that used to be completely buried in question 5 of the old parochial report. And that was, it would be the income would show up in other income. And as many of you know who have rental income, which is most of you, you could subtract from that rental income the expenses associated with it. And so those would be netted out and there'd really be no visibility into that for somebody looking at your parochial report. But now we have very specifically, how much revenue did your church earn? So that would be reported in the other income, but then broken out here. Yes, we got, $25,000 in revenue that came in. And question 12B, what expenses did you incur from that? Yes, we spent, we had $12,000 in marginal expenses that we incurred in order to generate that income. Those are the financial questions. So that's the new picture. So quite different from the last one. They're not irrational. I think in a lot of ways they simplify things, they make things straightforward in a way that they weren't before, but it's going to raise some problems, as I will now go into. So let me stop sharing that and go to a new, share a different screen with you. So this screen will look somewhat familiar to those of you who were at convention again, because this is really exactly the same form, or almost exactly the same form that I showed you then. But here is a line by line comparison of what was on the old parochial report and what is on the current one. So the old one here, the 2023 questions, and as you can see, remember I told you we got down, it took 19 questions to get down to total cash. And then now it's 8 questions to get down to total cash. And so I've lined them up just so you can see the comparison. So line 1 stays the same, 2 stays the same, 3 stays the same. All of a sudden, money used from investments for used for operations, well, that's now down in the supplement part from 9. So that was in 9C. So we brought that up. And then we got into other revenue. So we had 2 other income numbers here, or 2 other operating income numbers, one for other operating income generally and one for unrestricted bequests. Now all we have is that all other revenue and no breakout for bequests at all. Then we get into non-operating revenues. You can see now we have 1 question. So we used to have 4 questions about non-operating revenues. Now we have 1. Contributions restricted for specific purposes. And all these other things are not broken out. So again, simplified, but has implications for us. Operating expenses. We used to have 3 questions about operating expenses. So we broke out things that went to the diocese, outreach, and other operating expenses. Now we just have non-capital expenses. And then for non-operating expenses, again, we had 4 different questions having to do with, major capital expenditures, basically, Outreach, why they've always broken out Episcopal seminaries, I don't know. It's a very small category. And funds transmitted to other organizations. Now the latter three of those are not broken out, and we just have church capital expenses in there. And then we get down to the end, and so we had total cash, again, so same question. And then we've got, these are the new questions that I detailed, so you can see where we had a very simple question: what's your investment, your total investments at market value, and that's turned into 8 different questions right there. So that is so a lot more detail about those investments, and all 10 or 12 questions in all. So now let's take a look at the NOI calculation. So in the past, it was fairly straightforward. We basically added up, or even the system did it for you, questions 3, 4, 5, and 6. We added the total, and that was your NOI. Now what we're trying to do, because of course we have our pledges for, are based on NOI, either because you pledge a percentage of your income based on NOI, or if for those churches that don't do it that way, or sort of choose not to do it that way and do a fixed amount, we back into a percentage based on your net operating income and the amount that you've pledged. And that's now more complicated, to say the least, because, again, we still have the Platon pledge, we still have the investment dollar amount drawn, we still have all other revenue, and we do have the detail on what expenses you incurred from renting, and so that was something that you backed out before, and now we have that amount specified, and we can back it out, and so we can kind of back into an implied NOI by adding these 4, adding 3 of them and subtracting 1, and we get most of the way there in terms of an NOI. But because of the lack of granularity in some of their questions, there's now a few things that we're missing, which are really going to, could cause, significant differences, may cause minor differences. And I've detailed them here. So a big one is money withdrawn from investments for capital improvements. So as I pointed out, there was one number that said, how much did you draw down for use? This question 9C right here, right? Now, you might have drawn that down in order to pay your operating expenses, pay your priest, pay your insurance, whatever. Or you might have done it, drawn that money down to renovate your parish hall or renovate your organ or something. And so, or you might have endowed funds that can be owned where the income is restricted to a specific non-operating purpose, like outreach or capital gain, capital expenditures or something. And so we don't have that number anymore to break that out and say, okay, of this investment money, what was used for operations and what wasn't. And so we really need to know what money was withdrawn from investments for capital improvements, again, in order to be able to come up with an equivalent NOI calculation going forward. Likewise, so very similar to question 1, money withdrawn from investments for which the income is restricted to a non-operating purpose. Again, we have some churches, including mine, where you have endowments where the money is just going to outreach, and sort of the church is almost a pass-through. The church is administering it, but the money isn't, is not used essentially at the discretion of the church, certainly not used for operating purposes. And so again, that's something where we're just missing this information, and that may be quite material to a few churches. And then a third one, which could be big, most of the time won't be much of a problem, is unrestricted funds from bequests or gifts that the vestry chooses to add to endowment. So again, we used to have a breakdown and say bequests. There was a line specifically for bequests that are used for operations. And then there was a separate line, additions to endowment, and the latter was a non-operating item. Now, all of that is simply other income. So if it comes in unrestricted, right? If it comes in restricted, it's going to be captured in that restricted bucket. So that's fine. It wouldn't be counted. If it came in unrestricted, then it would be, it would be counted as something that looks like operating income. And if the vestry chose to take that bequest and put it in their endowment, historically that has not been counted as net operating income. And so we would need to break that out. So the only thing that I can think to do, and this is in talking to my colleagues around the country and talking to the people who created this, who kind of did this to us, is they're saying, well, if you need extra information, you need to go ask for it. And so I think what we're going to do sometime in the next week is create a web form which will enable you to give us extra information to answer these questions in a way that we can take it and use it for that calculation of the net operating income. And that would be something, completely up to you whether you choose to go in there and give us that extra information. And again, for many churches, this will be totally irrelevant. For those who don't have investment accounts, you don't have investment accounts, you don't have bequests, the existing form should work just fine. But for those churches that have a somewhat more complicated situation, I want to give you the chance to provide this additional information. And I think the way to do it would be basically a web form from our off of our website, and we'll set up a page for that. So I've had some discussions about doing that. So that is the situation, and I will stop there